Good morning, everybody. Welcome back to the Opportunistic Trader. It is 10 a.m. on Friday, and we're joined by Alan Hill, lead consultant of Treasury Consultancy. Alan updates our FX blog mostly daily, and you get his thoughts on Brexit and other G10 FX ideas. How's it going this morning, Alan?
Hey, good morning. Yes, fine, thanks, Mike. Yeah, we've got a bit of wild weather here, a bit like Florida's had, I think. We've got the back end of it here. So not great to get outside, but give me a chance to catch up with a few things.
Nice, nice. Well, it's been a volatile week. FX really hasn't been as volatile, especially relative to the other markets and is what we've seen in the past. But, what are your thoughts on, G10 this week?
Well, what we've seen so far this week has been the we'll start with Brexit. Obviously, there's been a lot going on, I think, behind the scenes, and it's been that kind of rumor-driven week, and you're either an optimist or a pessimist, or if you like, a Remainer or a Brexiteer with regard to what's going to happen. And people have been positioning themselves accordingly. We've seen quite a reasonable range in for the pound, and people jumping on board. Right, let's look on the weekly chart where we've come on. Oh, sorry. My weekly chart's taking the time to catch up. It's the pound's up on the day, up on the week as it was last week. But as far as the range is concerned, it's been reasonable. The high of 32.59 and a low of 31.75. So a reasonable range. But people are scared to go. To really go into the market, long or short, either way, with any kind of reasonable medium-term view. I mean, there's just too much going on. I mean, there was a story came out this morning I saw actually that one of the bloggers put online, which was picked up by the BBC, that Theresa May is going to make a speech today regarding the fact that the UK will not stay in any kind of customs union that it's not going to be able to get out of. Well, that's a pretty obvious statement given what's been going on, but it does give a slight insight into what has been talked about with regard to the Irish situation, and that's clearly not been resolved as yet, and is hoped for over the weekend with with the summit starting next week. And my personal view is the summit hasn't got a chance in hell of actually coming up with an approval for anything that gets suggested. Mainly because I think that both sides, both the UK side, will have to ask so many different people if they agree with it, and so will the European side. So Brexit is kind of, if you like, on hold at the moment, on the back burner. But Italy have still been causing a few problems. The bond issue yesterday, or the debt issue yesterday by Italy, the yield was twice as high as the previous issue, and that they've got 35 billion euros still to do this year. So they're still going to have a bit of volatility around that, and that is clearly going to hit the euro. I was going to go on to this in a minute, but I will now. On Monday, the budget has to be the Italian budget has to be given to Brussels for its approval, which is a weird thing to have to do, but it's the situation regarding their current debt to GDP ratio, which puts them in that position. They're not going to be able to improve their position for quite some time, and they're going to have to at some point. Will not necessarily go cap in hand to the ECB. Certainly require their help in buying some of their debt, because it's just not marketable right now with the current situation. Fitch and Fitch and Moody's have both warned of downgrades in Italian credit ratings. So all in all, it's not looking great for Italy, and that's what's driving the euro right now.
We've had a lot of that negative sort of talk on Italy and different European countries, and it doesn't really affect the euro. We traded down to 114-ish in the euro, then we just popped up to 116 yesterday, and overnight high right now is 116.10. It doesn't get the sense that any of this really affects the euro.
No, for me, the euro is so driven by two things. It's a major constituent part of the dollar index, 56% or something. One, and two, the market is so well educated with regard to any change in ECB's monetary policy that everything else is basically just white noise in the background. It trades here, it trades there, it trades a lot driven by corporate flows. I think the euro you'll find as well. But as far as actual pure economics is concerned, I think the euro is basically going to stay in quite a, relatively speaking, narrow range. I mean, if you say 110, 120 for the next year or so, I don't think you'd be far out.
Yeah. What about what do you think of the price action this week in the Aussie dollar, Aussie yen, typical more risk-off sort of currencies? We've had a risk-off week in global markets, but Aussie yen and Aussie dollar actually traded pretty well. What are your thoughts there?
Well, my view on the Aussie is to do with. I mean, the Aussies. I think the Aussies' depression over the last few weeks has been caused primarily by the trade disputes between China and the US. I think that the market takes it that if there is any escalation in that dispute between those two countries, that China's not going to be able to import as much as or going to need to import as much as it has done from Australia. I mean, my personal view on that is an very overblown reaction, and I think that China will continue to take as much as it can possibly get out of Australia. And I think that's why I said a couple of weeks ago, I've still got this this short sterling Aussie position that I've had for some time. And that's put in a cupboard and locked away for quite some time. And I do think that that's going to be a pair that's going to do me quite well at some time in the future. But for now, it is, as you say, it is a risk-off currency, and it's working contra at the moment.
Yeah, absolutely. So what are you thinking going into next week? As we're talking about, it's been a volatile week for global equity markets. What do you get the sense from speaking with other people? Is there panic out there? Is there more to come? What are you thinking?
I think certainly there's more to come with regard to the volatility in the equity markets. I don't think that's over yet, despite the fact that Europe hasn't been too bad today, and in the Far East last night, I think the markets were reasonable. I haven't really looked, to be honest. I've been concentrating on a couple of other things, but next week, obviously, again, we'll go backwards now. Then, as far as the EU is concerned, we've got the Italian budget to be delivered on Monday, and that's a very important driver for the euro within its narrow range and narrow capabilities. And I think that Italy has proven that it's not going to back down, and there's going to be some sort of disagreement there. The other major event in the first half of the week, as far as the euro is concerned, or the EU is concerned, is the election that's being held in the Bavarian region in the south of Germany. The main protagonist in that is the head of the CSU. That is the major coalition partner of Angela Merkel, and it's one of the more radical states with regard to migration, although it does have very progressive policies for migrants who are already there. So it's a bit of a difficult one to call, but there is a concern that AfD, Advance for Germany, Advance for Deutschland, the right-wing party, is going to make some significant gains there. And if that happens, then Mrs. Merkel's situation is going to become weaker. And over the longer term, two things will happen. Firstly, domestically, she'll be at some point challenged for the chancellorship. And also with regard to the EU, Mrs. Merkel and Emmanuel Macron, the French president, have been the major drivers of any review of the EU with regard to the further federalisation, and that will probably come to a screeching halt. And it's a hackneyed phrase, but the EU can do a lot of things. But one thing it can't do is stand still. It has to keep moving forward in order to ensure that everyone gets, as you know, their share of the pie. So that's as far as the euro is concerned. I think we got inflation in the eurozone next week, which is expected to be 2.1% unchanged, which is very similar to what Germany's was as well earlier this week. As far as the US is concerned, retail sales on Monday unchanged, also expected for that. I think that's going to be overshadowed by the continued spat between Trump and the Fed, which I must say, from this side of the Atlantic, is amuses me no end. I don't know what other of your other commentators are making of that.
What are they making of it? It's typical Trump. He'll anything that kind of goes against anything that he wants, he'll talk about. It's his typical mantra. So, there's a lot of funny, like even on CNBC, Steve Leisman and kind of Fed heads are, openly against it. They say it is meddling with the Fed, which is supposed to be completely independent. But, that's what the president does in a number of different ways, kind of trying to influence things. But I don't think it really has any impact on what the Fed will do. I think the Fed is data dependent, and, that's...
I would agree with you. I saw a comment yesterday where he said, "I've got to pay more for my to fund my debt." and I thought, this is so my fiefdom. This is, as you say, typical Trump, which quite amused
Yeah,
me.
look, we're back in now. We're in the prime of midterm elections in the U.S. are less than a month away. So everything that's being spoken is with a purpose and for campaigning. And, it's not our fault that the stock market just dropped. It's the Fed's fault, you know. So.
Yeah, fair enough. Great. Yeah, sure. Yeah. So I mean, as I said, I think the euro is quite reactive to the dollar's moves, and a lot depends on how we see equity markets going next week for the dollar and therefore the euro. But again, the UK is going to be in the focus again next week. Taking Brexit aside for 1 minute, we have house price data coming out on Sunday night, which is always quite an interesting number. It's one of the major online estate agents or house brokers who actually who report this who make this report, and it's been quite accurate recently, and they are viewing quite a severe downturn in the UK housing market over the last few months, and I don't think that's going to change at all. And then being the start of the third week of the month, we have inflation, retail sales, and unemployment. Inflation, I think, is going to tick up from 2.7% last month, 2.8 or possibly even 2.9 this. Sterling's been at the weaker end of its recent range, so that adds to inflation reasonably quickly in the UK. We'll have producer prices as well, and that will also reflect the weakness of sterling.
Take me through this, just more of a local over there. What's the housing market like, and what's the business like? If you own an export business and you just don't really know exactly what's happening with Brexit, how have you been coping, and what's your thought process for the next 12 months? Optimistic, pessimistic?
Your thought process, first of all, is it's doubtful you'll be optimistic. Again, it depends on where you stand in the Brexit argument. Of course, if you're a rabid Brexiteer, then you'll be praying for them to get out as soon as possible. But you're still going to have the uncertainty over the next year, and I think most export companies will be, if you like, dealing or will be sorting their exposure out very short term. Nobody's going to be particularly borrowing long-term funds at the moment to fund any businesses. Investment has fallen off the edge of a cliff, and I think that's something that will be very hard to get back. I haven't seen quite as much about firms leaving, or foreign-owned firms leaving the UK. And in fact, a big Spanish train manufacturer, heavy goods manufacturer, this morning announced that they were opening a very big factory here in the UK. So they are clearly quite positive about the future of the UK. But in general, a business, and a small, regular, run-of-the-mill export business, will be obviously very concerned about their future. And it's almost, I would say, impossible to hedge your exposures right now with any certainty. And again, a couple of other firms I talked to on that side of the business, they are seeing as much hedging as they will ever have, but it's much shorter tenors. So no one's going out much more than 3 months. As far as the house market is concerned, of course, we have a very much a two-tier house market in the UK. Basically, London and the rest. London is still absolutely booming with foreign purchases of properties being funded very easily, but there are lots and lots of rumours with the budget coming up in the next 2 or 3 weeks in the UK. There is going to be a tax on foreign purchases of houses as second homes in the UK. Now, if that actually does get pushed through, then I think that will have a major effect on London. And what basically happens in London tends to happen in the rest of the country, although the rest of the country is quite stable. I mean, a property in the area I live, which is about 3.5, 4 hours drive from London, over the time I've been down here, 5 years, it's probably gone up maybe 15-20%, whereas the same time in London, the same range of properties will have gone up by, I don't know, 200 to 250% maybe.
Wow. 200, and over what period of time?
Over the last 10 years, 250, 200% in London over the last 10 years, certainly.
Wow. But if you look at it on 15 years, because when you say 10 years, that takes into account the 2008 sort of drop. Where are we versus where we were in 2007 or so?
Hold on a second. I'll have to find that while I'm looking for that chart. I'll just tell you some other things. Yeah. So, I would say ballpark. I would say we're probably not a lot different, because the fall that 2008 brought around will have now been virtually absorbed, I would say. So yeah, we're probably not far different from 200%. I would say maybe maybe a little bit more, maybe 225, 230. I would say.
Gotcha.
As far as the rest of the data next week's concerned, we've got inflation, which is, as I say, will probably tick up to 2.8, 2.9%. Retail sales unchanged, 3.3%. And unemployment, which is going to be an interesting one. Not so much the unemployment data in the UK is very difficult to actually to judge one year to the next, because there are so many changes made to the metrics from time to time. So it's very hard to say this is a better number than last year or worse number than last year. So people are tending to disregard the employment data, the headline number, a bit like I disregard the NFP number for the same reason. But as far as wage inflation is concerned, I think that's going to tick up a little bit, 2.8%, possibly 2.9%. We had a speech by Andrew Haldane, who's the Bank of England's chief economist, in the week, saying that we're standing on the dawn of a new wage inflation spiral here, and it's going to move quite quickly. So I don't think he'd have said that if there was going to be any disappointment in next week's numbers. He'll obviously have had a heads up on that. So I'm expecting a quite strong wage inflation number. And the last thing, of course, is the weekend press is going to be full of Brexit in the UK. There are lots and lots of rumours about challenges to Theresa May's leadership. The Irish question is also on everyone's lips, because the Irish party who support Mrs May in Parliament have actually already come out and said that they will definitely vote against the Brexit deal if there's any consideration that the Northern Irish may be treated any different to the rest of the UK in the deal. So there's a lot going to be going on in the first half of the week, and I think the reaction over the second half of the week is going to be driven by that.
Yeah, absolutely. A lot going on. I thank you for joining us and giving us the update. It's active time in the market, so I appreciate it, and keep us up to date with blogs and anything you have in the chats. Thanks a lot, Alan.
My pleasure. Nice to join you. Thanks very much.
All right, talk to you soon.